Capital and revenue expenditure. By the end of this video, you should be able to define the terms capital and revenue expenditure and also provide examples of capital and revenue expenditure. Let's start by looking at what is meant by the term expenditure. Expenditure is money that goes out of the business. Now, applying that term expenditure and putting the word revenue in front of it, what we're actually looking at with revenue expenditure is expenditure that is related to the day-to-day trading of an organisation. This means costs that are incurred through doing what the business has to do normally to trade. Examples will include the purchase of stock or inventory, as I like to call it, paying your rent, paying salaries or wages, paying your rates, paying utilities, paying your insurance, paying your telephone bill, paying postage and stationery costs, paying any bank charges or interest charges you might have, and paying depreciation. If you're not sure how to calculate depreciation or what is meant by the term depreciation, then check out my BeeBusinessBee video on depreciation, which explains this concept and how it's calculated. Alongside revenue expenditure, we have capital expenditure. Now, capital expenditure is expenditure that relates to the purchase of long-term assets, or non-current assets, we like to call them. If you want to think about capital expenditure in a more simplistic way, it tends to be expenditure on assets which are expensive. So these are the expensive assets that a business tends to purchase. Examples would be land, building, machinery, equipment, vehicles, and fixtures and fittings. Now, if you notice, I've categorised those as non-current assets, and I've also got the term tangible. Now, tangible means you can touch something. Now, you think about those assets that I've listed on that side, they're all assets that I can physically touch. As a result of that, I can physically go and stroke my building, I can stroke my land, I can stroke my machine, I can stroke my vehicles that I buy. But they're all examples of capital expenditure, large outlays of expenditure. Well, on the other side, are still examples of capital expenditure, but these are what are called intangible assets. So, for example, goodwill. So there may be goodwill of customers who will use my business because they have built up trust and loyalty with me. Patents, trademarks, or brand loyalty and brand names that I own, they've all got a value. If I was to sell them, they're all worth money. And they're all a form of capital expenditure if I wanted to purchase one of those. Now, the best way to test your understanding of this concept is to actually have a go. So test yourself. Are the following capital or revenue expenditure? A building, a telephone bill, wages, machinery, car, and rent. What you should do is check your answers against this video, because all the answers are in the video at the start, and see how well you understand the topic of capital and revenue expenditure. Thanks for checking out the BeeBusinessBee YouTube channel. Don't forget to click the subscribe button down below to subscribe to our YouTube channel. Don't forget to follow me on Twitter. It's @BeeBusinessBee. Also, give the Facebook page a like. It's facebook.com/BeeBusinessBee. And lastly, don't forget to check out the online hive of activities found on BeeBusinessBee.co.uk, full of quizzes, activities and resources. And remember, until next time, keep buzzing.